Hey guys, it's me, Diana, your life insurance exam teacher and income coach. So, this video, I'm going to be going over a couple of questions from the life and health insurance exam. Guys, this PDF that I'm going over that I'm showing all of y'all, you can get. It has 50 questions. Go ahead and look for the link down below. If you have questions, drop them in the comments. Let me know. And also, just so you know, check out my website. I have an option where I help people pass the exam. I do one-on-one tutoring sessions. I also have a group course you can join where I give you all of the information that you need to pass the exam in 2 weeks, although you have access to the course for 4. So, guys, I've helped hundreds of people pass the life and health insurance exam. And if that is what you're doing, if you are interested in the insurance industry, have questions about it, let me know. Okay, guys, let's get into the questions. So, this right here is the PDF. Like I said, the link is down below. This is what it looks like. This is a hi. Thank you for joining. And, guys, also, in addition to this channel, go ahead and look for me on my TikTok, Instagram, and my Facebook. Come and follow me. Like I said, if you go into my website, you'd have an option to chat with me for 15 minutes, one-on-one tutoring sessions, as well as information on my group courses. All right. So let's get started with the questions, guys. So this is how my one-on-one tutoring sessions and my group sessions go. We're going to go over some questions. We've go, of course, over content, but then we go over questions. Then we break it down super detailed. I'm going to tell you which is the answer, which is not the answer, and why. And we're going to go into detail about it. Like, I'm talking deep details. This PDF, though, all 50 questions are very similar to what I'm about to show y'all. We're going to go over 5 questions right now. So go ahead and study with me. And again, if you want to study with me one-on-one, so we can talk about what you need, specifically your plan, and help you pass the life and health insurance exam, let's do it. But a limited pay policy has a graded death benefit, B, no cash value, C, premium payments limited to a specified number of years, D, premium payments that are paid to age 100. I'll give you 5 seconds before I go over to the next one. Feel free to pause me if you need to think about it and move before you move on. All right, so then when you go through my PDF, you're going to scroll over to the next one. This is the answer and my explanations on the side. So over here we have the question, a limited pay policy has, my answer is premium payments limited to a specified number of years. So if you got it right, drop it down in the comments. Let me know. Did you get this one right? But let's explain why these are the answers. So first, you're going to see I have that explanation. So what is a limited pay policy, right? A limited pay policy is short for a limited pay whole life policy. And what that is going to mean is that instead of a regular whole life policy where you're going to pay up until age 100, we're going to pay this in a limited amount of time, hence limited pay. Sometimes we can say if you're going to pay in 20 years, limited 20 pay, 10 pay, those types of questions. All right, guys. So anyways, A is not the answer. So the question does not give us enough information to know what type of death benefit this policy may have. So a graded death benefit. We don't know given the bit of information you got in the question, right? B, a limited pay policy is a whole life insurance policy which has a cash value account. It does. Again, it's a limited pay whole life policy. No cash value, wrong. And then D is not the answer because even though premium payments that are paid to age 100, total opposite, right? Our given definition of a limited pay policy is that our premium is paid just for a limited amount of time. So making D wrong, the fact that it is a whole life insurance policy makes B wrong. And graded death benefit, again, you don't get enough information in this one to tell you, is this the answer or not? Okay, guys. So let's go on to the next one. I hope you got it right. Do you have 100 so far? Let me know down in the comments. Let's go over to the next one. Number 2, Jane is covered by a whole life policy. Which insurance product can cover her children? A, the assignment provision, B, the payer benefit, C, accelerated benefit rider, or D, the child term rider. So again, I'm going to give you 5 seconds to figure it out. Pause me if you need, but I'm about to move on to the next one. Okay, guys, so here again, same setup. The red ones are the answers. The black ones are going to be the questions alone. All right, so Jane is covered by whole life policy. We get that bit of information in the question. She wants to cover her kids. So assuming that the insurable interest is there, the relationship is good, we double check it, we figure it out, and yes, we can add her kids to it with a child term rider. Okay, so a parent can use this rider, a grandparent, and then anybody who has legal custody over a child. So when we check off the box, make sure that it's there, we can add a kid to the policy with that child term rider. Okay, so the assignment provision is not it. What you do with the assignment provision is you can assign ownership, either a percent or full or whatever you want, ownership of your policy to somebody else. Okay, you can do it today without asking the company or anything, but you do have to let them know within 30 days of having had done it. This is how we sell policies off to companies or somebody else if you needed to do that. Well, maybe not somebody else, but whatever situation you wanted to do it. Okay, so the payer benefit rider. This one is going to waive the premium of a child's policy. This is where they want to confuse you all. But if you've got a child's policy, a standalone child's policy, not that we're adding them to an adult's policy, but if you have a 5-year-old who's got a whole life policy, now we add the payer benefit rider. And if the person who's paying for that policy, if the payer gets sick, passes away, becomes disabled, something happens, then we waive that premium until the kid is 21. They take ownership. They can keep paying if they'd like. That is my payer benefit rider. And my accelerated benefit rider, this is a rider that will allow somebody to get up to 80% of their death benefit if a doctor tells them that they are terminally ill. So their death is accelerated benefit rider. Okay, guys, this is how I break things down with my students. So if this is making sense and you've struggled to pass your exam or you're studying for it, you want to pass it, make sure that you don't fail it the first time. Go ahead and follow me, subscribe, DM me, set up a chat with me, and let's start studying together. Set up a tutoring session with me. Let's do it. Let's go to the next one. All right, so a level premium indicates A, the premium is fixed for a period stated in the contract, then becomes variable. B, the premium can only be changed with the consent of the insurer. C, the premium stays level until the policy's renewal date. D, the premium is fixed for the entire duration of the contract. I'm going to give you 5 seconds to figure it out, then I'm going to move on. So pause me if you need. Okay, guys, so here we are again, the same setup. I hope you figured it out already. I gave you 5 seconds, I believe. If not, I'll give you 2 more. All right, level premium means that your premium is not going to change at all for the entire duration of the contract. C is not the answer because here it talks about it being the same until the renewal date. The question does not give me enough information. This could be a whole life policy. If that's the case, we don't have a renewal date. What if it's just a 1-year term? Also, again, do I have a renewal date in that case? Is it going to get renewed? I don't know, right? So not enough information to know for sure there's a renewal date. That's why C is not your answer. B, the premium can only be changed with the consent of the insurer. While technically that's true because the insurance company always has to be ultimately who makes any changes, premiums are always told to the customer. Like we always tell them, are you going to have a premium increase or decrease at some point? It's going to be in that illustration. So anyways, B is not the answer because that information we already tell the customer. And if it's, for example, a variable life policy where we can change it around from term to whole. That will also, if somebody has that policy, decides to make that change, that's going to ultimately determine their premium. The company has to consent. But again, this question doesn't give me enough information. A, the premium is fixed for a period stated in the contract, then becomes variable. Again, this is a definition question. Level premium, that's all this question is asking you for. Where you want to stay is within the scope of what the question said. You don't want to overthink it or add more to it. Level premium, that means it does not change, right? It's just level. So that is why D is my answer in this case. Let's go to the next one. All right. Stranger originated life insurance. Stoli has been found to be in violation of which of the following contractual elements? A, consideration. B, competent parties. C, offer acceptance. D, legal purpose / insurable interest. I will give you a few seconds to come up with your answer. All right, pause me if you still don't know. Let's go to the next one. All right, so this right here, guys, stranger originated life insurance. Okay, so there is 4 relationships where we are allowed to get a policy for somebody else. If you're an agent and you're sitting with someone, you need to make sure that if you have one person buying a policy for another individual and you have an owner and an insured and they're 2 separate people, that relationship is within insurable interest. Insurable interest means that there has to be a genuine interest for the other person's life to continue. Okay, so here we go. These are the 4 relationships. I break them down and I explain it. So, number 1, a parent can insure their child. You, an adult, can insure one of your parents. So, we can literally flip that relationship around. The grandparents can insure their grandkids. And if you have legal guardianship over another individual, a child, or even an adult who may have that situation going, you can get a policy for that person. The 5th one we created, we can bypass insurable interest with, is if you have business partners. Because now, if you've got business partners, let's say you've got Jane and Joe, and they are caterers, they have a catering company. Jane does the marketing, she goes out, she gets the clients. Joe does the cooking for the clients and the parties and whatever. So now they both need to work in order for their business to work, in order for them to get money and to be able to survive and live. So now they've created insurable interest in each other because they both need to be healthy, well, and good, being able to come into work so that each other can live well and get money and survive, right? So now you've created insurable interest. So you've really got 5 relationships, but 4 are set. So anyways, legal purpose, as far as my contract elements, is the one that is being described by that. If it's a stranger, I cannot get a life insurance on a stranger, because then what's to cause or to stop me from possibly doing something wrong, right? So that is the idea behind that. We cannot buy life insurance policies for strangers. So that should just kind of make sense on its own, right, guys? So let's move on to the next one. And again, if you like the way I'm breaking these down, if you want to tutor with me, then go ahead and check out the site. The link's right there, or you're going to have to type it in, but the link is in the description. Let's start studying together. Number 5, this is going to be the last one we're going to do, guys. So don't forget to subscribe. Go to the links, check it out, set up a chat with me. ABC Insurance Company has accepted a life insurance application which contains unanswered questions. The company then makes the application part of the life contract. In this situation, the insurer has A, waived one of their legal rights, B, issued avoidable policy, C, committed an act of fraud, or D, assigned the risk to a reinsurer. I'm going to give you 5 seconds before I move on. So figure it out. And pause me now if you need. Okay, guys, so here is the answer. So if an agent ever forgets to answer questions, and this nowadays is going to be more typical on paper applications because on the computers, it's really not possible for us to do that. But, anyways, if you're doing a paper application and it's sent in with missing questions that have been answered, and that underwriter decides whatever, let's say that it is the question about whether or not they are a pilot, thinking or studying to become a pilot. So now the company has waived their legal rights to that bit of information. So if the policy is issued, it's now part of the contract, right? And 3 months in, 5 months in, the company finds out this person is in fact a pilot, should have signed what we have, the aviation waiver. Then now we can't come back. We can't cancel this policy. We can't ask him to sign the aviation waiver. We cannot change that policy in any given way because this person's a pilot, because my underwriter said we don't need that bit of information. He's probably not a pilot, right? So that is what they're doing. They are waiving their right to that information. Then that information cannot be used in any way, shape, or form to change the conditions of a policy, even if the insurance company may want to. Right? Issued avoidable policy, that is not the case. So a company can issue a policy with as little or as much information as they would like, committed an act of fraud. My prior explanation for B should really just kind of get rid of that one. And then assigned the risk to a reinsurer. In this bit of the question, again, you want to stay within the scope of the question. It does not talk about any other given companies. So this is talking about the reinsuring process, and that has nothing to do with this. Okay, guys, so if you want this PDF, check out the link below. And as you can see, I've got a whole lot of questions. I've got 50 questions here. Check out the link below and let's start studying together. Also, if you want to set up a one-on-one study session with me, we can do that. Or you can come and join my group session in 2 weeks. You're going to get everything that you need to pass the life and health insurance exam. Don't forget to subscribe. Don't forget to follow. Check me out on some of my other social media accounts. There are the names for them. And I'll see you in the next video.